Hello there, my friends. Chris Marcus here with you on behalf of Arcadia Economics on Tuesday, August 15th, 2017. And maybe you realized, maybe not, but today is the 46th anniversary of Richard Nixon finally cutting all ties between the gold standard. So today, a quick video just about a couple interesting historical notes about that event, because really when you look at the monetary history of the country and the world, well, I think that's a big one. Keep in mind what was leading up to that. Actually, it's interesting. There was what was known as the London Gold Pool, where essentially when Lyndon Johnson, you had the guns and butter where they wanted to go to Vietnam and have the social welfare programs at home. I think it used to be guns or butter, but Johnson just combined both. And obviously that had some effects on the financials, because they were spending a lot of money that they were printing didn't have. So at that time, with gold, the dollar is still redeemable in gold, there were a lot of people coming in, taking their gold. And there was a big gold drain, which was one of the factors that led Nixon to pull us off the gold standard. Again, if you are interested in more about the London Gold Pool, go to Mises.org. That's MISES.org. We will make a link to that at the bottom of the video here. And look for London Gold Pool. It's actually pretty fascinating. Very similar to what we're seeing happen now. Maybe the mechanics are slightly different, but again, you see the gold shifting from the west to the east, where you have the same type of banker shenanigans that try and do things in paper, and eventually people realize and wake up and see what's going on. So anyway, we'll put a link to that below, but back to Nixon. Now again, imagine if, again, I haven't had a TV for a couple of years, so I don't really know what people watch on Sunday nights these more. Is it Game of Thrones, or I guess it used to be The Sopranos? Imagine one of those shows that just on an average Sunday night out of left field, unexpectedly, if Trump or Obama or whoever was the president at the time just popped in the middle of the show and said, "We have a stunning announcement," or probably wouldn't say we have a stunning announcement, although it would be stunning. And Nixon's announcement was stunning because I believe he came on in the middle of Bonanza, which was, I think, the Sunday night show at the time, and said, basically, we're leaving the gold standard. You can't get gold for your dollars anymore, which I guess was never, I don't know if that would be considered a true gold standard. I don't know if people could come in and cash in their dollars for gold, or if it was more just at the institutional, global, sovereign level. But in either case, any redeemability basically was canceled then, and he also decided to put us on to price controls. Which has led, you saw what happened, then you had stagflation through the 70s, leading to the escalating gold and silver prices in 1980, which could have been perhaps the end of the dollar as we knew it back then, although you had Paul Volcker come in, raise interest rates to 18%, basically say, all right, yeah, we have printed a lot of money, now we're going to reverse that. Of course, that's the opposite of what we've had this last decade, last 2 decades even, where Greenspan's low interest rates, Bernanke's even lower interest rates, and you Janet Yellen coming in, keeping interest rates low. Yes, she's raised it 1%, and no, I'm not impressed by that, and think that after 8 years of 0% interest rates, the fact that you finally got up to 1%, I mean, it's drops in the bucket. Again, if Volcker had to take interest rates up to 18% back in 1980, now look at the amounts of debt and money and printed money that's out there. What interest? 200% interest rates? I mean, where would you have to take it to actually have some sort of normalization? Again, I feel like you've passed the point of no return, so if they even tried that, then the whole thing would collapse, and that's the predicament. Again, that's why I feel so comfortable owning silver, because whether the Fed continues printing great, there's going to be more money, silver will be in good shape. If they stop printing, again, you see a collapse, similar perhaps to 2008, although I continue to believe that it would really be the currencies that blow out this time. Now back to Nixon, keep in mind, now I'll call this a general rule of thumb, so take that as you will, but there's a school of thought that historically the lifespan of these paper currencies is about 40 years before you reach the point where the things that are happening now are what starts happening. If you go back through history and look at different countries that have had paper currencies, how they've imploded, it's actually usually a similar progression. So it's not entirely surprising that here we are 40 years later from Nixon taking us off the gold standard, and whether it happens this year in the next couple of years, I don't think we have another 40 years of life kind of as it's constituted today. I mean, again, hey, when I left Wall Street in 2012, I thought it was imminent. I'm stunned that here it is 5 years later, silver's still trading 16 or 17 bucks. Government's still spending and borrowing and printing and just pretending it's not happening. Actually, will be interesting to see. I hear we have another debt ceiling debate coming up next month. I gave up much hope in those a couple of years back because usually they just raise it and demagogue about how if you don't support going deeper into debt, you're not a patriot or responsible. So, although I know I've heard a lot of the folks I respect think that perhaps this one, maybe because of the divisiveness between Trump and Congress, maybe will be similar to that one back in 2011 where there was actually, again, that was when the Tea Party was a little more influential, and you saw gold and silver really respond to that. That also led to the downgrade of the U.S. by S&P from which formerly had the U.S. rated AAA, and finally saw, well, they're just going to keep borrowing and going deeper into debt. Maybe this isn't the greatest credit profile in history. So it will be interesting to see how these things play out. Again, back to Nixon. Don't want to get too sidetracked today because I have a couple quick funny stories here. Funny, scary, sad, shocking, disturbing. You can decide after you hear it. But somehow, I don't even remember where I got it from. A couple of years ago, I read Dick Cheney's autobiography just for kicks and giggles. I remember as maybe the second or third chapter where he was talking about how he thought the Vietnam War was a great thing and he was proud of it. And it was about right there where I remember thinking, geez, if anyone really thought that was great and fantastic, right off the bat, usually, maybe you're not going to have too much in common with this person. But a couple chapters later, what was really interesting was when Cheney talks about his role in the whole Nixon and the gold, taking us off the gold standard. And in case you're wondering, I'm half about to sneeze, so that's a bizarre reaction there. But I think I'm good now. So Cheney talks about how basically he was part of, I don't know if you call it the cabinet, but whatever the team was that when they were coming up with this plan, and he describes Donald Rumsfeld was there. I don't know if Nixon was actually in the room, but what he writes about was just so fascinating because I'm picturing a bunch of middle-aged, angry, depressed, political white guys in suits down in Washington, kind of like you'd see on the West Wing. And he talks about how basically the method for deciding the price controls, which in case you're not familiar with what that means, basically telling businesses this is what you can charge for your product, this is how much you can increase prices. And he talks about how basically it was, like all these things, a negotiation with other people's money. So it's like him and Rumsfeld and a bunch of other guys, and I always use these examples because they come directly from his book, where he was saying dill pickles can go up 3% next year, and toupees can go up 4%, and just in that way that, one of the things I liked about Ron Paul and some of the other guys that I respect is that, if you believe in honor and doing the right thing, hey, maybe your wife maybe your wife wants to go here, you want to go there, you compromise, that's okay. But if it's, this is integrity and being honest, and someone wants to rob something, there's not, that's not perhaps a situation where I'd like to compromise. But again, typical of the way our political system works, where they're compromising, but often compromising morals. And it's just fascinating to imagine Rumsfeld, Cheney, and these other guys making compromises and trading. You have some guy, all these price increases they're talking about are affecting businesses. The guy who makes toupees or dill pickles that went through all the steps he went through, and now just at the random behest of Nixon and the gang, this was how the economy was being decided. Now, perhaps the only thing more impressive than that is that at the end of the chapter, actually, first, I think it was the beginning of that chapter, he referred to Nixon as a great free market economic thinker, which I had to giggle when I heard that one. In the same time, you're talking about someone removing the tie to any form of honest money and then telling the market what prices should be would certainly be the opposite, in my opinion, of any sort of free market ideology. But the real whopper was when you get to the end of the chapter, and Cheney actually acknowledges that the plan was a complete disaster. And he wrote something that's, maybe it's not word for word, but said almost exactly, this is why we realize we should leave managing the economy to the economy, and the government shouldn't be involved, which may be one of the few things I agreed with in the book. Of course, unfortunate that, what was it, 30 years later when he was vice president under Bush, of course, there's, I'd say, a widespread belief that perhaps Cheney was running the show more than Bush. Who knows? But still, certainly seemed as if he didn't follow up on that idea that the economy best left to businesses and people and letting the free market set prices. But again, that's, I guess that's what we get from politicians, which is okay. Well, maybe it's not okay. It's probably not okay in any sense, but it is what it is. And the best we can do is plan around it, realize these patterns. You can see what they've done in the past. You can extrapolate what's coming. And in either case, I'll put the link to the London gold pool below, and you might find that fascinating on this somewhat historic anniversary. Who knows? Maybe by next August 15th, we'll have the effects of all these things that are building, whether it's Andrew Maguire's bullion coin, or which is a crypto backed with gold, or just all these other things that seem to be getting ready to unleash this addiction, or these handcuffs to the dollar that we've been faced with, and allow for some alternatives, which I think will be a great thing. But let me know what you think. Leave your comments below, and we'll see you again tomorrow. Thanks.